If you use just the 4 hour and 15 minute chart, you will become a profitable trader. Why? Because it's simple, it's easy, and most importantly, it's an absolute money maker when using the right hand. So in this video, I'm going to show you how you can use the 4 hour and 15 minute chart to make money from trading. Okay, so to put it simply, the 4 hour chart you use for your analysis, your daily bias, and the 15-minute chart you're going to use for your entries. And we're also going to look for a sweep on the 15-minute chart. So that's like the simplest way of saying it. And I'm telling you, this right here, 4 hour and 15-minute chart has made so many traders profitable. It's insane, right? So even if you've got years of trading or a complete beginner, this is what you want to do. Put all your emphasis and focus on the 4 hour and 15-minute chart. So the first thing you're going to do is obviously get the 4 hour chart up, whatever market you trade, because what I'm about to tell you here will work on every single market. I say this in every video, but people still keep asking me. I don't know if they're trying to troll me or whatever. Like, hey, does this work on gold? It works on every market. And in this example, it's going to be Tesla in live price action. Well, the markets are closed as I'm recording this, right? It's Friday morning UK time. So US markets are closed. But again, this concept, right, which is really liquidity, works on every single market imaginable. I cannot stress this enough. Do not put it in the comments because it's going to annoy me. It works on your market. Whatever market you like, this will work. But the first thing you're going to do on the 4 hour chart is, and the only thing we do on the 4 hour chart is we need a bias, right? We need to know, okay, where is price likely to go next? So the first thing I like to do on the 4 hour chart is I like to zoom out and I like to just eyeball the overall trend of the market. Now, I don't care about, there's no formula of, hey, let's look back 6 months. I just want to look at the most recent bit of price action. Now, hopefully, now obviously price has consolidated a bit, but where's it been going? Where has price gone? Right, it's bullish, it's going up, and where's it gone for? It's gone for this liquidity pool here, and this major liquidity pool here, which I'll talk about in a second. So for those who don't know, there's only one reason these financial markets move, and any market in general, and that is for liquidity. Liquidity is simply money or stop loss orders. So you can imagine every major high, and this is obviously the most major high, right? There's always going to be stop loss orders at this high, right? Lots of traders still, and lots of large funds still use support and resistance. And for those who are wondering, they have a tiny win rate, like a 20% win rate. But when they're right, they catch a massive trend and they make money, right? So they still are kind of profitable. They just have a tiny win rate, which if you got into trading, if you're like me, you probably did not get into this for a 20% win rate and to go on like a 10 losing streak like every week. That's not why I got into this. But anyway, lots of traders, lots of funds are going to imagine, they still believe in support and resistance, that price is going to hit this level and bounce down, and they're going to put their stop loss orders here, shorting Tesla, shorting whatever market this is, hoping that price is going to come straight down. Now, if you've been trading for any length of time, you'll know that it's not how these markets move. Instead, what's actually going to happen is price is going to come up, take out this high for stop loss orders, and it's going to do two things. Right now, nobody knows. I don't even know. I say I don't even know as if I'm like some god. I don't know. Nobody knows for sure what will happen after this point. Price could continue to explode up on Tesla, or it could reverse, right? But even if it reverses, it's going to take out liquidity here, right? It's just how the markets move. So all markets move for liquidity, which is simply stop loss orders. And it's not just financial markets, even in like property markets. If there's no money for people to buy, prices are going to have to come down to adjust for it, right? It's just a basic economic principle. But anyway, what this means for us as traders, right? We said that we're bullish. Remember how we said the most recent bit of price action here is bullish. Emphasis on the emphasis is always on the most recent bit, not this bit here. I don't care that prices drop down here. I care about what's happened most recently, right? Price has gone up, and I'm asking myself, okay, where are the market makers? Where is smart money forcing this up to? Where are they going to? What liquidity pool are we going for, right? And it's pretty obvious, hopefully, after what I just explained. Price has gone for this one here, right? Smashed right through it. It consolidated a bit. You know how I said we don't know what happens next? And then it spiked up, taking out this, and then this is our next target. Now, price could tap it, but what's very likely, right? Again, nobody knows for sure. There could be some crazy, news announcement, but 9 times out of 10, what is likely to happen is price going to continue upwards and take out this high, right? And this is the overall bias direction of the market. So we have our bias, we have our direction, we are bullish. Now, that's the 4 hour chart done. That's your daily bias, top-down analysis, all done. If you know how to use a weekly, monthly, daily, multiple market analysis, the strongest and weakest pairs, by all means add that to your analysis. But if you just want to make money, and I'm assuming if you're watching this, you're like, hey Atif, I just want to make money from trading ASAP and quit my job. What do I need to do? This is what you want to do. 4 hour and 15 minute chart. So 4-hour chart is done. Let's get onto the 15-minute chart. Okay, so here we are on the 15-minute chart. So we've done our analysis. We know we're bullish using just the 4-hour chart. Now we're on the 15-minute chart. Now this is really, really important. We have our buyers. So I do not care about any bearish fair value gap. I don't care about this bearish order block. I'm only coming down onto the 15-minute chart under the operation, under the lens of, hey, I'm just looking to get long. I just want to get into the position. I just want to buy. Right, really, really important that we've done all the hard work, all the homework on the 4-hour chart. I just want to enter my trade. Now, I say I just want to enter my trade. There's a middle step that everybody watches, which is a liquidity sweep. Now, if you don't know what a sweep is, look at this nice picture on screen now when we're bullish, right? Look at it, maybe pause it. You probably want to take a screenshot actually and put that on your wall. But essentially what a liquidity sweep is, when a market's bullish, you know the old adage, right? You can't just buy the dip and hope and pray that price comes up, right? You can imagine a fair value gap here. What happens most of the time is that price will just disrespect the fair value gap, even if it's bullish, and take out your stop loss. So what we really need to see in price action is we need to see price take out some sort of old low, shoot off in the opposite direction, give us a retracement, and then ride price off, right? This is what a liquidity sweep really is. It's a stop run before the real move. Now it's a stop run in the opposite direction. So if we're bullish, you want to see an old low taken, right? Obviously if a high was taken, that's not a stop run because the market actually wants to move up. So it's a fake move in the opposite direction. Now, the 15-minute chart, I'll be completely honest with you, you're going to get less sweeps, but every single trade you have will be way higher probability than the 5-minute chart. So a little trading law, if you will, is the lower the time frame. So if you go on the 1-minute chart, you will find sweeps in multiple sessions, right? Multiple trades in the session. However, it's going to be less probability, lower probability. So again, and we're only going to talk about the 15-minute chart here, which is why I really like it. You should always be trading multiple markets, in my opinion, especially if you're using the 4-hour and 15-minute chart, because you won't get a sell every single day in, let's say, Tesla, in gold, or whatever. So if you have a few markets that you can trade, perfect, right? But for those who, you can try and look in this bit of price action here. Can you see a fake move, right? Sort of fake move that takes out stop loss orders before price shoots off? Maybe. If not, if you've got the indicator, which you can find in the description, you enable it. This shaded part is a sweep, and this one here is a sweep. Now, this is invalid. And again, I don't want to talk too much about this because this is the US stocks. You only want to be trading US stocks during the actual open, which is you see this white shaded box. See how this is like, what's that, like yellow, beige? Right, you only want to be trading in this white section here. But again, you can easily imagine London session for Forex, Asia session, New York session, whatever, right? But this is just a stock principle. So you want to kind of ignore this because it's not a key time of day. And this right here, all of this white box, this is the US open. So really, this is the sweep here, right? So this low, price comes down, sweeps it, shoots off, gives us the fair value gap, and then we can ride price off. Now remember, this is the 15-minute chart. So if you run the 5-minute, 1-minute chart, this would look a lot more obvious, a lot more aggressive. However, 15-minute chart, very high probability. So let's just disable this actually. So if you're at the indicator, that's what you're gonna do. For the sweep, this big candlestick right here, this is really the sweep, right? Price comes down, it takes out this low here, even these lows here. This is what you would call pre-market low, pre-session low. So you can imagine if you trade New York session, this would be London session low, and which it basically is, right? The market comes, takes it out, shoots off. There's a little fair value gap, which I'll talk about in a second, and then ride price off. So how do we make money from this, Atif? This is probably the question that you want to know. Okay, how do I make money from this? So we've got our buyers on the 4-hour chart. 15-minute chart, we wait for a sweep, or we look for a sweep, which is really, really, I wouldn't say difficult, but it's probably the hardest thing you're going to do in trading. You've got your sweep. Now all you need is to wait for a fair value gap to form in the opposite direction. This is your confirmation that you're on the right side of the market. Now you might be like, oh, Atif, this is a small fair value gap compared to this. Remember the 4-hour chart. This is why I said the 4-hour chart is king, right? All the analysis we did told us that we were bullish. So I do not even care about any bearish fair value gap. I only care about getting long into the position. So this fair value gap here, this will be your entry, which price beautifully almost fills. And then what you're going to do, enter on the fair value gap. Now I always say this, I still stand by this, but your stop should be fixed. It has to be fixed, right, at this low right here. Now this, admittedly, this is a massive stop, right? It's a quite wide stop. So there's two things you can do. Number one is you can just have a wider take profit, which I think as a 15-minute day trader, you absolutely should do. And then number two is you can get onto the 5-minute or 1-minute chart, and you can imagine a tighter stop loss or whatever, but I'm not going to do that in this example. I'm actually going to show you something pretty interesting. So let's say, I always do this as well, I target a 3-to-1. this would be a trade that you can hold overnight, right? So it's not really swing trading because you're not holding on for like a week, but you can hold for like a day or two, right? And you can catch a massive move. So if I was trading this personally, 3 to 1, or you see this liquidity pool right here, easy liquidity pool, which you can target. Oops, you can move that down. This could be your target right here for liquidity. Now, I wouldn't target more than this personally, but very realistic on the 15-minute chart, especially if we're bullish on the 4-hour chart, that price is going to shoot up and take that on. And for those who are asking, hey, Steve, how do I trade options? This is what you would do, right? You would get a weekly option and you would hold on for like basically a day. And again, if you're trading Forex, this would be like you went to New York session and then Asia session, you hit take profit. I think that's absolutely fine. And if you want to learn more about strategies just like this, make sure you go check out this full playlist where I show you how to use the 4-hour and 15-minute chart to make money from trading.